Afternoon, good evening, wherever you are right now in the world. I am so glad that you are here, live or on the replay. Honeymoon is sweet. Some people don't yet understand it, but do understand if you're not into the intro, you could just skip ahead. You're free to do that. You don't have to listen, but many that have been around for a long time, we started streaming 5 years ago, understand the value of setting your mind correct as we get ahead, as we go ahead to get ready to dig into our sessions and make sure that we have our pulse on the market. Macro, TA, mechanical positioning, CTM. It's a new week, and what a wild ride we've had since the market opened last night, overnight. And then as New York opened, New York so far taking it way off the lows. We had a lot to talk about, a lot to get into, and we're going to do it all. We're going to do it all. We're going to do it all together. If you're new here, welcome. If you're not, welcome back. This is Jordan with Trading and Investing, CTM. Let's take a look and see, is gold setting up for a breakout, or is that more of a bearish continuation pattern about to trigger to the downside? It is very close over here. Gold could go either which way. 2 days from now, Wednesday, we have options expirations on the 21st. Obviously, the news of the day is on Friday after the close. We saw US was downgraded by Moody's, taking them down from AAA to AA1. And Bessent's like, whatever, that's a lagging indicator. I don't really care. The Saudis don't care. And then we've seen a major pivot on Sunday from the U.S. Treasury Secretary, and the U.S. will take a look at that. But you can see the first downgrade over here. I mean, in retrospect, if you zoomed out, it looks like nothing. Markets, however, weren't really sure how to digest it at the time and went under first a correction, which was then obviously and ultimately faded. And then you could see Fitch downgrading U.S. down over here. A lot of people think that, well, why now? Why didn't they do this last year? Look, I don't know. It's what's happening. Let's take a look at what's happening right now. By the way, I went over here and was looking at the U.S. debt projections to the famous chart out to 2050. The reason being, over here, you're looking at the current debt over here, $36 trillion. It's staggering. And have you ever seen a government agency actually project something that was, like, first of all, met? Are they drastically underestimating or projecting 25 years from now what the U.S. debt will be? Obviously, and likely so. Nevertheless, here we are. Scott Bessent saying, listen, now we're going to go ahead and grow our GDP faster than the debt growth. And that will stabilize the debt to GDP, which is the most important number. I mean, are we going to see government? How are they going to do that? Are we going to see government spending increasing? That's the easiest way to spur on growth. How are they going to get the GDP number up? Obviously, you saw over the last week some mega investments coming from the Middle East into the U.S. That's going to be helpful. Is it political? It could be political. It doesn't really matter if it's political or not. It just matters that it has happened. And what does this do? Does this actually increase demand for U.S. treasuries? Are we going to see continued sell-off of U.S. bonds? We saw a U.S. 30-year at 5% today. Did the 10-year peak for now? I don't know. We'll look at that together. We'll take a look and we'll take a look. This is the last time that there was a major credit downgrade, August 5th, 2011. Market fell 7% next trading day. Markets were off 2% and change overnight until New York came to the desk and buying them up. A lot of people wondering, is this V for real? And is it going to continue? When you look at the magnitude of Trump is like, buy, and then what has transpired since is I mean, hold on a second. Let me just go ahead and take that trend line and put it off the low of this major gap. You can see we tested it. So this is a line that I'm looking for as an earliest indication of any type of breakdown. Obviously, we're near the monthly highs right over here. If we break down from here, this would be my first signal that potentially we're coming down for some type of breakdown. The lower line is where we have a big technical breakdown, and then we could come in and actually test the lows of April. Now, many people right now are thinking that's not going to happen. Like, there's no way we're going to be testing the lows. Look how far we've come, and it certainly looks good. By the way, we are all over the place, and I love it. The calendar is weak. This week is weak this week. Week and week. Until, but nevertheless, it's not on the news headline front. And today you saw a few hours ago, China saying, wait a second, the US is actually not doing what they said they were going to do. They're undermining the consensus that we reached in the Geneva talks. And markets initially fluttered down on that, not really paying attention to it at the moment. Again, 2 days from now, we do see the 21st options expiry. I wonder if that will put a change of trend into the markets, and we could see things escalate very quickly if you were to see US-China rift to actually grow apart. All they did was actually extend out their negotiations and put a little bit of a quell in the market. That's something to watch out for. Another thing to watch out for is it doesn't seem that many. This is obviously the communication is not very clear, but it doesn't seem that too many people are actually coming to the US and saying, oh, we like the terms that you propose and we want to make an agreement. Last I saw is Treasury Besson, the US Treasury Secretary Besson said that they're going to send out letters to basically all their trading partners and be like, well, this is what it is. That seems to me likely to be a further negotiating tactic. We'll see. I guess what I'm trying to say here is we've seen a lot of not clarity, a de-escalation, but there's a lot of unknowns ahead of us. We want to stay on our toes. There's some pretty significant people. We'll get into positioning, of course, across not only Bitcoin and crypto, but also stocks. But we are looking at Cardano entering a short trade. So we have what I call the beautiful dance going on as Ethereum here is long and still holding that well unrealized gain. And now we're seeing markets kind of hedging themselves, but we'll get into that. I mean, Steve Cohen, do you want to fade Steve? Maybe, I don't know. Paul Tudor Jones, I don't know how this guy makes the list here, but whatever. A lot of people believing that we actually will retest the lows. Me, myself, I just follow the technicals. We have, after the liquidity grab down over here, breakdown over here, which didn't go anywhere. That's where we have the trend line established off of. That's the trend line we were just looking at from this perspective right over here. That the major technical breakdown. I'm going to go ahead and just lift it up one more time and say that would be the earliest indication that we're going to see some downside, pressure. I don't know where it will lead, but if we break down from that green line, which is that line over here, that would suggest that we're coming in for a deeper retest. That would be the first pocket. If that didn't hold, we're coming down lower. What about on the upside? Well, we talked about the liquidity grab to the downside. This was our first repair, breaking outside of the wedge to the upside. Our second line that I looked at was the deep seek low that we were able to trade above. By the way, we take out the deep seek low if we were to break down outside of that trend line. And as long as that holds, this bullish momentum continues. The final repair right now is going to be not an all-time high, which is obviously very, very nice, but it's this trend line that we have over here. And then I'll put another one up over there as well later. We're far from there. What I messed up was that We see we had the break out of the wedge and then into the resistance on the pullback and then reclaiming that. That was a major repair. I had my eyes focused on the deep seek, so I was kind of sleeping there. And well, I want to do better and get it perfect and all right. So we got Santiago chiming in over here as the dollar continues to get punished and rates continue to sell off. And he's like, listen, I've always said that I believe that we're actually going to see interest rates head higher. And I don't necessarily think that bonds are going to crash, right? But I do think that they're going to break. But ultimately, what he says all this leads to is that there is the sovereign debt crisis. I don't see the wording over here, but basically what he's saying is that all of this ultimately leads to a sovereign debt crisis, which he believes is going to go ahead and see a lot of that money flow out of bonds. And is the sovereign the US, or is the sovereign going to be how are yields doing in Japan? Or what about in Europe? By the way, I did see a very, very like good signal. It looks like Germany is taking a look at their energy policy and saying, you know what, we probably did not such a good job in taking our nuclear offline, and we might actually see them return to that source of energy, and that would be obviously very good for Germany and then maybe even a growing trend across Europe. It looks like the Chinese are set to become the dominant nuclear power force by 2030. That is a major, major, major win for them. They're right now the largest importers of energy. So if they were to change that, that would be overall very, very, very bullish on China. So are we going to see money flow out of bonds and into U.S. equities? It seems right now we're seeing a lot of outflows of U.S. equities, specifically from Europeans, and we're actually seeing lots of emerging market stock markets here. I mean, very bullish so far this year. It's the U.S., the cleanest shirt, which looks pretty dirty right now, but we've seen also a big devaluation of the dollar at the same time. So is that a trend? Or are we going to actually see, is that a trend that's going to be lasting? I mean, it's a trend right now in 2025 as Liberation Day is upon us. How long that's going to last and whether or not we will see a lot of foreign funds flow back into the U.S., that remains to be seen. If we're seeing a much stronger dollar at any point, I would imagine that would then attract a lot of money into U.S. equities. Are we seeing lots of money flow out of bonds and into U.S. equities, or are we seeing money flow out of bonds and into gold, which clearly looks like the greatest beneficiary as we see a lot of people stacking a lot of other central banks, sovereigns, not stacking U.S. treasuries, but moving that into gold, and eventually it's likely going to be Bitcoin as well. But could it be the U.S. equities, or are we seeing something different this time? I don't know. I want to take a look at the dollar, and I want to take a look at a bunch of other things with you, and then we'll get into our positioning. One thing I have my eye on, though, as you all know, when a lot of people a few months ago worried about that inflate, I was like, no, that was the peak. We're going to start seeing disinflationary forces come into play, and for the next 3 months, the data came in lower than forecasted. And then I said, I think we're about to see a turn. True inflation is actually showing that turn actually occurring. And we have our eyes on oil. Oil is off its lows. So, I mean, is this something to be concerned about right now? Nope, not yet. It could be. We have to continue tracking and watching it, because if we do begin to see some of the tariffs drama priced in, and that starts reading higher inflation, you know, that puts the Fed in a further difficult situation. if they are not able to actually, they have that dual mandate, and they've been talking right now about the friction that might come into light if they continue seeing higher inflation and then they start seeing the job market actually falling off. We are seeing, or last week, there was a lot of 3%. It was almost like first Microsoft said they're going to lay off 3% of their global workforce. And then I saw other companies also 3%. Seems weird. That's what's happening. We have to watch if oil breaks out from this trend line to the upside. If oil breaks out, if we see US equities able to run, if we see Bitcoin put another leg up, and if markets are going risk on, oil is going to likely follow suit with them. And if oil follows suit and starts to break out over here and then head higher, we're going to see inflation ticking up in the near term. US dollar flirting with a breakdown, right? We took the underbelly over here. We came right into the resistance. And then since then, we've backed up. This morning, flirting with a breakdown. We're watching to see where we close today. Here's our as precise as we could get. If we close below this trend line over here, that would be, this is a bearish continuation pattern with actually a liquidity grab to the upside. And then we could see actually the dollar flirting and potentially taking out its low. We have to watch that for sure. Now, what are we watching? So we're still currently, by the way, long the dollar, short the dollar, long the dollar, and it looks like we might be, you don't always get to push your position. It's often cutting your losers short and sometimes also your winners short, right? Just small wins, small gains until you get the opportunity to hold. So definitely watching the dollar over there. Another thing that I'm watching, though, is the Fed's balance sheet. A lot of people are talking about, headline from Yahoo Finance, why is the Fed quietly buying billions in bonds and hoping nobody notices? Well, we know that they're winding down QT. They are down to now $5 billion a month, which is not a large number, obviously. And if they have a bunch of bonds to roll over, they're saying we saw the Fed just snapped up billions in treasuries, $43.8 billion in total last week. But here's the thing. All the Fed is doing, bonds come up for maturity, is they're actually letting only $5 billion a month just completely not renew. The others, they are renewing. So this is not some type of stealth buying. This is exactly what the Fed has telegraphed they're going to be doing. It is what they're doing. Are we going to come to a point in time where QT stops and then we start seeing the balance sheet rise? You all know that's the next portion of this cycle that I'm looking for. But I am watching to see if that begins rising. Right now, QT is supposedly running, right? But we are seeing the balance sheet going flat, or it looks flat to me. And for the first, remember this is March 2023. And we said at that point in time, people thought like it was back on. We're like, no, QT's running. We're going to be coming out. But over here, it looks like we're kind of flatlining a little bit. I'm going to keep my eye on and watch what happens as you look at the first week of May, balance sheet flat. Second week of May, balance sheet flat. So is this something new that is currently developing? It certainly looks like it. I'm going to be watching what happens over here. And even if the balance sheet is not yet growing, it is different, even though they're supposedly running QT, and we could see that $5 billion roll off by the end of May, at the end of May. We still got a couple of weeks to watch, but something that seems to be developing, something I have my eye on, something that I'm watching. And before we get into position, let's take a look at what's going on here with Bitcoin. Bitcoin looking good. Now, obviously, we talked about a lot of people getting very comfortable. I guess one thing we didn't talk about, and when we were looking at the stock market and currently watching our risk, we know that we're positioned well on the right side, but watching our risk, look at the put to call ratio, and all of a sudden and suddenly we've come back to an area where close to, it's really, you see the bottom red line over there, it's at 0.8. it seems to be that a correction starts not on the way down, but as this starts rising above, right? Market starts correcting. A lot more people then start repositioning. Something to keep an eye on. There's a lot to be uncertain about still. And now that we're seeing markets just a stone throw, I'm talking about Nasdaq right now, equity markets, indexes, a stone throw off their all-time highs. A lot of people are now getting very bullish, and I'm saying, hey, listen, let's continue to see what's happening. Yeah, I'm glad you're here. It's good that you're here. Bitcoin here thus far off its lows, retracing a lot. Let's take a look at what's going on. I mean, I would love to see Bitcoin make that leg up into 120, 130. Bitcoin bull runs is certainly long right now. The opportunity, this is a liquidity grab to the downside that's currently in play. I wonder if I just take a look at what's going on. We still got some room before we come into some resistance off of this area. I'm just trying to get a feel for what's going on. This would be, we looked at the Nasdaq, what would be an early breakdown, right? This was what we were following a lot earlier. I'm just trying to see. I don't look at, we don't want to lose that trend line. You can see very clearly, right? But what we do want to see is that breakout above, and that breakout above is going to carry us to new all-time highs. Would love to see it. And check this out. It's almost right on time. In so much as that past cycles aligned from their all-time high. Notice definitely the diminished downside volatility would have been diminished significantly more had FTX not been scamming and selling Bitcoin they didn't have and blow up. But this was the target zone that didn't seem too likely to me when we were trading down at 75,000 just a little while ago. But now all of a sudden, Bitcoin once again right on time. And that's not even exciting for me. What's exciting is this area over here. And this is where I project we're going to see Bitcoin as we get close to the 2028 halving. So here's a good way to look at it. A lot of people are focused on this and the top. I'm like, no, I'm not focused on this on the top. And why this area is going to be very difficult to navigate. This area is going to be I expect diminished downside volatility. And I don't know what's coming. I have no idea what's coming. It's a very fragile system. So much could happen. But it seems that central banks are a lot closer to moving towards easing, right? We're coming out of the tightening cycle. 2022 was the tightening cycle. Rates are right now elevated. It looks like that they're going to be forced to be going the other way. Now, how are they going to refinance all that debt? The U.S. has $9 trillion of debt to $7 trillion to roll over and another $2 trillion to raise to keep the government going. How are they going to do it at these rates? How are they going to get the rates down in order to refinance? That's the tricky part, is what comes ahead of us. But coming at, and don't forget, commercial real estate market, a lot of that debt needs to be rolled over right now into 2026. Well, there's going to be a lot of carnage, but that actually might provide a lot of liquidity to the upside. Someone's got to pay up, and if no one has the money, they're going to have to print. So again, very difficult to navigate what happens in between. But if you just zoom out a few years, this is the projection, and this is a good way to see it. To get rid of this idea and be more focused on when we come into this area. Diminishing returns is going to be disproven, I believe. I hope. Now, we could have something like someone else selling Bitcoin they don't have. We could have some type of blow up that's unforeseen. Always events happen that people just had no idea in real time. Anyway, let's keep going. Thus far, everything right now well on time. Let's take a look at our positioning over here. You notice I only have 3 or 4 stocks on the daily, and that's because FNGU is currently still out of play. Now, they're saying that June 1st is what I saw. So what am I? Here we go. It's expected to be reused around June 1st. So I've been saying, look, this is very unfortunate for us in so much as that right now we're holding some open positions, right? TQQQ 7% into profit. NVIDIA right ahead of earnings here just took a position, currently about break even, and Tesla up 6%. If you look at what was going on over here, there we go. This is FANG futures contract over here, FNG. We're trading FNGU, you all know, which is triple leverage. But you could see as you look at our positioning, by the way, a lot of people are like, oh, you're late, just taking position now. And I'm like, no, we're not late. We avoided the whole carnage. What we try to do is take high probability, not the highest probability, right? 6 out of 10 trades expected to stop out upon entry with a percent profitable over here on what am I looking at? That's on FNGU. Sorry. TQQQ, 48%. But this is, look at this return over a 5-year period, right? We're not looking to get every single move. We're looking to take trades that have very strong risk to rewards. Average losing trade, 3.5%. Average winning trade is 21.3%. So about a 3.5 to 1 risk to reward. You always heard like you should trade with a 2 to 1 risk reward. 3 to 1, that seems like, wow, that would be unreasonably great. And then look at it over here at NVIDIA. Average winning trade, 22.89%. Average losing trade, 1.6. How about Denim Apples? How about that risk to reward? Tremendous risk to reward. Here we are right now feeling that, you know what? Good time to be into the market. We don't know whether or not we're going to get any follow through, but here we are. So FNGB does not really have the data, right? So let me just jump over here with you and put over. We went from FNGU to FNGA, and now they're FNGB before they make the switch back to FNGU, hopefully permanently or for a long time. But we would be in a position right now. That position, just like the other three, would be into profit. And don't forget, we have a much larger stop loss here on FNGU, 7%. We would be holding very comfortably here. Look, we're just not in it because of the fiasco that's taking place. And soon it is going to be, I don't know that it's going to be on June 1st, and I don't think so. They said the move to FNGB was coming on the 15th of May, and they did it on the 13th. So who knows? The communication has been very, very, very bad, very poor. Bitcoin bull runs is currently in the market, suggesting that we could be looking at further upside potential. If you don't think that buy and hold could be outperformed, welcome to Bitcoin bull runs. Over here, we're looking at 107 in and out once again. We're looking at Ethereum still holding its open position, a mere 47% into profit. And Cardano just entered the market, is now minus 0.7%. And we saw that Solana took a small loss on its position. Directly after this live stream, I'm going to make sure the Discord alert for Solana is adjusted and fixed accordingly. We're looking at the IBIT, the Bitcoin futures, Bitcoin spot ETF solution here. We're tracking on our old GBTC, currently holding a nice position. And if we make that leg on Bitcoin, it's going to be really, really nice. The Bitcoin obviously sold off over the weekend after Moody's announcement that they're going to be downgrading U.S. debt. I think the markets began recovering once Scott Bessent made the morning rounds and was like, listen, we're going to be bringing up GDP, that we're going to just grow our way out of this. And markets have responded favorable since. Right now, we're looking at Nasdaq turning green, Bitcoin still down 1%, and Ethereum, like risk on. Ethereum leads. Ethereum is currently here, also green. So we could see, or you should see, the small loss occurring on 107 in and out of the market. We were looking at risk to rewards over here. How much performance do we have over there? We got a lot of performance. Risk to reward is average winning trade 8.3, greater than 4-1. You gotta love it. And right now we have all of our 8-hour models obviously out of the market and waiting, but hedged here as Ethereum not only holds, but look at this. This is great. As you continue to see now, the deviations here starting to come down closer towards the zero line in this pullback consolidation. And that's just giving us the opportunity going forward to be able to lock in more and more profit. Gotta love it. It's going to be a nice one, a nice grab. Here you can see Cardano saying, you know what? I like the short. It didn't follow through right now. Looking to exit this trade on the next signal period, unless obviously markets begin to retrace and turn the other way. Solana not able to carry on this one yet. And we'll be looking here for the next reentry on the buy side. I'm going to make sure that the Discord alert is fixed directly after this. And we, my friends, are right in front of everything, making sure we stay on the right side. I didn't look at the 10-year, so you're perfectly in tune over here. Let me just jump back and look at the 10-year. And we saw the major gap up on the news and thus far selling off. Again, I believe this was as high as we were going to, top out. I don't know that that's true, so we'll look where we're wrong. But I think we're going to revert back down now. Too soon to tell. But I would not be surprised if we just continue in this area. Where is that wrong? And what should we be looking for? And look, I don't know about you, but at any point in time, we get close to 5% on the 10-year. Whether it's the Fed or the US Treasury, someone's taking notice and someone's going to do anything. I think that the closer you are to that area, it looks like a really good time to be interested in taking a position, an attractive position. Again, there's a bunch of debt to roll over. I'm betting on that they're going to be able to do it at a lot more attractive rate than we have right now. But you never know what could happen. Is the spike over here what we're looking at? I don't think so. That could be tested. A lot of traders probably have their stops right over there. I don't know. I don't have a clear read. And I can't give one if I don't have a clear read. D-Power US 10-year yield is higher than Microsoft 10-year corp bond. That's funny. Well, Microsoft is a cash cow, and the US government absolutely bleeding money. All right, everyone. It's Monday. We got a lot of work to do this week, staying in front of it, not getting comfortable. We'll continue at it. On the way out, if you haven't already and you enjoy being here, just take a moment. Help support the channel. Hit that thumbs up. If you're new here, take a moment, subscribe. The signal here is absolutely off the charts. It is life-changing. Everyone have a beautiful day. God bless you. I'll see you all back on the inside.